Good morning, ladies and gentlemen. The time is 10:55. Today is the 2nd of March, and we had a holiday yesterday, a local holiday, and global markets continued to trade. There was a lot of volatility, wherein after a green to flat opening on the American indices, there was quite a large sell-off. 500-point sell-off almost from SGX Nifty yesterday morning highs to the lows, and looks like the period of volatility is going to continue for now. And apart from that, all kinds of actions being taken against Russia. For the first time, social media is playing such a big role in terms of how people are acting, countries to act, asking different companies to stop providing their services, selling their products in Russia, making it impossible for them to transact. Everything from shipping companies to product companies like Apple, everyone is boycotting Russia, more or less. And so it's a tricky time in the market. It's definitely, as I said on Friday also, sorry, Monday, it's not the time to be taking big risks because it can work out very well or very badly, and you want to eliminate those outcomes. One more thing, right now India VIX is at 30. Many people will take this as an opportunity, start shorting very long-term options. Please know that every time when you see VIX climb to 50, 60, 70, it's because people do this. They get trapped. They have to cover their position. Liquidity will die down. They will cover at any price. And that is why the VIX shoots up to the extent of 50, 60, 70. It doesn't happen in a linear fashion. It is because people think, okay, there's a huge opportunity here. Let me short December options. Let me short longer dated positions. Eventually, once volatility comes down, I will be able to manage it. Those positions get stuck very badly, and that's what leads to tremendous IV rise. It's the people who short the initial IV rise that cause the later IV rise. Anyway, apart from that, the idea for today was to benefit from a quick crush in IV if it comes. See, the thing is, right now the predictability of the market is very less. But what do we know? It's a Wednesday. These options are expiring tomorrow. They can't possibly hold on to their value. So my idea at the onset was short the 15,800 put option and short the 17,000 call option. And basically very similar premium, enough premium that a small delta move in one direction will not push me out of my entire position. And quickly, what I also did there is, as the call started to go up into the initial up move into these three candles, I moved up my put options to 16,000, making us 16,000 and 17,000 strangle. My mark to market never went into red from my entry. So from my entry, completely in the green, into the up move, into the down move, the strangle itself just continued to lose thing. I was trading 18,500 sizing. It just kept losing value to a point where I had to trail my stop loss. Initially, I trailed it quite aggressively. The idea was 8 to 10 points will be my trailing stop loss, because in about 15 minutes, I was already sitting in 15 points of profit. And yeah, into that, finally decided to take a trailing stop loss of 5 points. So at my best mark to market, I was about 8,25,000, and I had to put on that 5-point trailing because maybe it gives me a lot more, maybe it doesn't. Difficult to know. Even now, when I've exited at my trailing stop loss, two reasons for the exit. One, so I exited on this candle. Just let me go over the exit time. See, I've exited exactly at 10:40. Why have I exited at 10:40, which is here? There is a potential for a break here. There has been cooling of IV the entire day. I'm sitting on a good gain. If there is a big IV spike from this down move, because this down move, that 17,000 call option is not going to protect me. It had only about 26 rupees, whereas this call put option was trading at 36. Let me tell you exactly what would have happened in case we broke there. In case we broke there, very quickly this would have jumped back to the 40 to 50 range. In this particular range here, it would have jumped into here, whereas the call option actually would not have lost this, which was trading at 26 at that point of time. Maximum might have gone to like 25, 24. It is not going to, at that point, the put is just going to gain, call is not going to lose. What is my other option to bring down my call option? I don't want to bring down my call option because right now the randomness in behavior is such that a call option might fall under 20 and then close at 50. We've seen this on Monday also. The call option, which was same 17,000 call option, was trading at 30 in the morning. It went over 100 by close. So it's that kind of a time. It's time to stay nimble. You take trades, like in my case, I'm taking high probability trades that should work, keeping very tight exit criteria. In the morning, being a Wednesday, my risk was about 10 points, 8 to 10 points, not more than that. And within that, the trade just worked out. So it just kept trailing the entire way. And finally, at a point where there was a logical exit of, okay, might break the day's low, also down 5 points from the day's high mark to market, you have to lock in profits somewhere. Now, can you lock in, like, since I exited already, this position has given some 2-3 points of additional fall off. Maybe by the end of the day, it gives 20 points or it gives 0. It's difficult to know. These options are expiring tomorrow, but at the same time, the risk of overnight doesn't go away. So it's not like magically these are going to just give up a lot of value. In the call side as well, when there are so many positions in the market, when there are people who are aggressive on the short side, aggressive on the long side, it is very possible to see a tremendous short covering move. So just not carrying any positions is the best thing in my opinion. A lot of people with hindsight later, if this IV crash, hindsight, they'll come and say, wow, it gave such a good opportunity, people missed out. There was a risk. They will forget that there was a risk simply because the risk didn't play out, in case it doesn't play out, which of course we all hope such a risk doesn't play out. Anyway, that's enough about my rambling. It was a good day. Anyone who shot volatility at the open should have done really well. From here also, there is huge premium, 1,000 point strangle with tomorrow being expiry, trading at 60 plus. You don't see this. This doesn't happen often. And but please be very mindful that that risk is always there. And if you have clear conditions for exiting your trades, if you are taking overnight positions, do decent hedging. Don't be the kind of person who thinks that, okay, I'm going to go all in here, because those are the people that push this India VIX from 30 to whatever higher levels.